Welcome to a very special episode of the Created Economy podcast. It's our weekly interview series where Gregarious and I talk with the key players from the creator economy at large and discuss the key topics impacting the growth of the industry. You can check out new episodes of our podcast on our website at createdeconomy.com. That's where we'll have long-form content, theoretically, as well as highlights and recaps of each episode. You can follow us on Twitter and everywhere on social media at Created Economy. While you're there, be sure to subscribe to our YouTube channel so you can get notified of the latest episodes at youtube.com/Created Economy. And for all the latest news that we are curating, or rather I'm curating because Greg loves his division of labor, you can go to our Flipboard, flipboard.com/@Created Economy. Today is a very special episode because we don't have a dedicated guest. We are actually going to dissect one of the some of the interesting reports that we see on the internet. And to help out with that, hey, Greg, I forgot to bring you on stage. I almost forgot.
I mean, I was here. It's the division of labor,
It becomes a natural pattern. I'm like, oh, Greg's here. I might as well bring him on. I don't know. It's like,
I don't have an accelerator to be part of anymore. So hopefully my schedule will be better.
It's all part of my thing. I bribed the Techstars people to say, hey, can you admit Greg so I can take over this podcast and basically claim it as my own? And there you go. My plan almost.
I assume that was the intention, so I just left it alone.
It's a win-win, right? Well, let's get right into it. Let's introduce Abhinav, a fan favorite, friend of the podcast. Abhinav's here from URFeed. We chatted with him and his co-founder Garth, weeks ago, right? And so let's chat about this latest report.
Actually, but just in case folks don't know, we do co-host a show on Tuesdays about Web3. So,
oh yes, that's also true. Yeah, be sure to check out Created Works at 10 o'clock a.m. Pacific for Greg and Abhinav and bunch
we
of
should
other
just start using like Star Trek times because no time zone makes sense to anybody.
Zulu, well, I don't know. We could go based off of UK time or Greenwich Mean Time, I guess. And I guess everyone really hates that entirely. But
I think isn't GMT what you use in the UK though?
Yeah, that was the confusing bit today because it's GMT, but then in the summer it's British summertime.
Right. Yeah, because I was giving Abhinav the time earlier today, and I was like, I think it's 5 hours, and he's like, no, I actually, and then I checked it, and it was 6, but like we have daylight savings, and anyway. But today,
you can use a calendar, but that's fine.
Yeah, I think we've had our many variations and takes on many of the sort of writings from Li Jin in the past. I would say. And I would argue, in the past, I've probably been a hard critic, but, hopefully in a positive manner. But this new report, I think, is really great because I do think it is a fairly balanced sort of take on what's going on in what they have now. This is a new term. It's not a new term, I guess, but it seems like they are trying to wrap their arms around it a bit, right? The concept of the ownership economy. From Variant Fund, and they've it's not bylined by anyone in particular, actually. So it's sort of credited.
Well, yeah, it's no one's individual, but like the entire Variant team: Li Jin, Geoff Hamilton, Jesse Walden, Spencer Noon, Derek Walkush, and Medha Kothari, I believe.
Yeah, and so this seems like an evolution. From the passion economy, which I think was more of like the banner that Li Jin had previously sort of advocated for and sort of espoused and did a good job with. But yeah, we've got this new report by Variant, and we wanted to take some time to go through it with everyone and provide our insights or our takes, I guess, on some of the bits and pieces in here. So Ken, did you want to start with the kind of the key takeaways? I know they listed those out. Do you want to go through them?
Yeah, I mean, there's 5 key takeaways. I mean, this is actually not a lengthy report. It's all on the website. But I guess before we start, like the ownership economy and the passion economy, and then we have the creator economy, we have the enthusiast economy. Isn't that basically the same thing? I mean, it's just different. It's all labeling, right? Or is this particular to like the Web3 side of things?
I guess
And I
they're
guess
serving the same purpose, right? Is empowerment of the individual, whether that individual was an early YouTube creator and it was like, oh, there's a cool tool, started getting some traction and that aspect of things. And now, well, that creator is perhaps not just in that lane, but that creator could be an NFT creator, it could be a mainstream creator that is working with NFTs. It's just broadly kind of creator of things which create value. That would be my view.
Mm-hmm. Cool.
I will say there's some nuance, Ken, though. I think I don't know what the outer circle is. Let's be clear, right? Like, because I'm not actually sure if there's a unifying thing that all of those things fall into. But I do know that this is a Venn diagram of some kind, right? Like, and some circles are concentric and some are just overlapping.
Gotcha. Well, I mean, let's dive into the first takeaway here. Is like the ownership economy is massive and growing quickly. I mean, I think this is kind of a pretty straightforward takeaway. I mean, yes, this is a burgeoning market. There's a lot of people that are getting into this Web3. I think Web3 has been the thought is not necessarily about, hey, it's all about crypto, let's get into crypto. I think it's about the whole decentralized and taking, as Abhinav had pointed out, is like being able to take control over your data, take control, build your own community without necessarily.
Before I think before we dive into that, I guess what they define as the ownership economy, probably a good starting point. Is the products and services that will define Web3 and the next generation of the internet are those that transform users into owners. And as they say, we call this the ownership economy. So just to be clear, what they are inferring is sort of the ownership economy is one of the key point or distinctions they make is that Web 2 was the user generated like sort of ecosystem, right? Like where users generated the content that ultimately powered sort of that economy, Web 2. They are sort of refer to Web 3 as the user owned economy, right? Like, so now it's not we're generating it, but now that we are involved in owning things.
Right.
Just important, I guess, like relative to thinking about what they mean by it. They also support this idea, though, of the ownership economy being big and massive with a couple of stats. Are you in? Is this from the post, Ken? All right, can you scroll to the other graphic?
Yeah, got that.
Cool. Yeah. So they have these numbers here. So they kind of use like some anecdotal data, I guess, to talk about it. Like they look at like MetaMask monthly active users, 32 million, Ethereum monthly transactional users, 6 million people. Is that 6 million people conducting transactions? Is that how you read that?
That's how I read it. In terms of transactional users, yeah, like they're making. Okay. I guess it's equivalent of like monthly active users, kind of the same thing.
But what are those active users doing if they're not using Ethereum? Right? Like it's
something else, perhaps.
6 out of 32. I don't know. It's like 1/5 ish, right?
Here you go. In the fourth quarter of 2021, Ethereum had monthly average transactional users about 6 million and daily active transactional users about 400,000. So,
yeah, I guess it's the difference between monthly versus daily versus overall. I've set up a MetaMask wallet, but I bought one NFT, but one a year maybe.
Yeah.
Well, let me ask a question. I guess I'll ask it of Abhinav since I think he's our for this economy.
I'd say it's a good proxy. I mean, I think it's not the definitive one because you can systematically create many wallets, so it doesn't represent people.
Right.
But it's a good start. It's just it's like how many social accounts do you have? I don't create 20, but I could. So I'd say it's a pretty good proxy.
I heard someone refer to them as biological wallets one time, like, and that number was like only 300 or 400,000 were actually owned by people.
That phrase sounds really bad.
Yeah.
Yeah, well, actually, there's a quote in there. Financial Times and Chainalysis estimated that there were 360,000 owners of NFTs as of 2021, which probably more aligns with the people part than the wallet part, right?
I don't know. I mean, NFTs is a bit more
But they
recent
also can
than
be scattered
right?
across, I guess, lots of wallets too.
Yeah.
Okay, well,
NFTs aren't necessarily like something that you can buy, that everyone has access to, that can easily buy, right? So
I don't know. I'd argue probably NFTs is the primary entry point into this universe now compared to coins.
but they're also limited. It's a limited set, right? I mean, like
well, it's a limited set in a ocean of limited sets, right? Like, so
yeah. Well, it's like also like 360,000 owners. How many are own like multiple out of those, right? It's not to say like there's 360,000 unique owners. Like they own only one, right? So like how do you further dissect that number?
Yeah. So I guess yeah, it makes sense. I think part of the problem here is that data is hard to get to, actually, even though it's all public and available, right? It's somewhat hard to grok the actual size and scale. Like, for example, I've been trying to figure this out. Like, how many NFT projects are there, right? And like, there's a lot of ways to look at that. Like, you could look at it only by volume, right? Like, which would be, you could use OpenSea or something like that to maybe see that. That doesn't mean that's how many there were, right? Like, doesn't mean that's not how many actual artists there are creating NFTs, right? Like, so it's a little hard to see all of the data, I think, in the space right now. So I think, like, relative to this idea that ownership economy is big, look, I know we're in it and it feels big. Right. I don't know that it is big yet, right? Like,
I mean, there's certainly more opportunity for it to grow. I'm not, I don't.
Absolutely. In the premise that it's not going anywhere, right? Like, and if we were to like take crypto out of it and look, we use NFTs as a proxy for, like, say, growth of the actual market, let's say, right? I think like we're in a very prominent upward swing, right? Right now, but it's a very small base.
Yeah, and the report continues to go on in terms of talking about decentralized autonomous organizations, or DAOs. They're estimating there are over 1,000 DAOs right now. Does that number surprise
Which again is like such a tiny, ridiculous number. If you think about it, right? Like imagine going to an investor, like, yeah, my target market is 1,000 people, right? Like 1,000 customers. No, by the way, there are many funded DAO related products. But that's really small, right?
But the 360,000 number seems really low. And that doesn't seem right. I mean, it's Financial Times, who are not really that heavily in the space. So wouldn't be surprised if that number's wrong. 6 million monthly users on Ethereum. Like, yeah, crypto came first before NFTs, much more longer run up. Like, that makes sense that number's bigger. The 32 million users on MetaMask. Yeah. So are most people buying tokens, and now NFTs are starting to onboard the mainstream because it's interesting and it's like, oh, that's fun. What's that? Why has everyone changed their profile pictures? What's going on here? Bringing the curious into the Web3, I think, is kind of a recent phenomenon through the NFTs. But before that NFT craze, most people were like, yeah, I want to buy Doge and see if I can make $1 million, right?
Right. Yeah, absolutely. Yeah. But I think that has become like, and we've had kind of this discussion loosely. I don't think we've ever had it on the show, but actually Lee made this quote in a Twitter space a while back, but she made this comment that, like, for example, with creator coins, AMA coin, Rally coins, et cetera, like NFTs have actually been more successful at capturing the value intended by those economies, right? Like, and I think we are seeing that, like, a NFT as a collectible is a more relatable concept to most people, right? Like, it's a tangible thing. You at least feel like you own something. There's more emotional attachment potentially, like, built into it. Hence, there's more opportunity for building community around it. And I think, like, commingled with like COVID pandemic times, being locked up, people finding new ways to connect with new people and make friends and have like belong to something was actually a very powerful construct in the growth as well.
Yeah, and you raise a good point there, Greg, that in terms of like the tokens, that's actually relates to the third takeaway from here, but which we can dive into a little bit later on.
Let's go to the second one.
Yeah. So the second one here is the user ownership can jumpstart growth. Sustaining it is tougher. So this one, I think it's kind of I don't know how to really decipher this one. I kind of understand the spirit of it, but it's like the particulars of Web3 have kind of elude me. I think it's like you can get people to adopt it or to buy into it, but then what happens afterwards? I think that's.
Did you read this section? I know what I can at least speak to. I know what they describe or how the analogy they use here, but.
I mean, so for me, this is just like the biggest thing especially for startups and creators is you can onboard a shit ton of people up front because, if you give something away, if there's hype, if there's excitement, you can bring them in. But then how much of that is based on speculation and how much of that, people kind of trade it and move on. So the average NFT Discord is, mint day is like insane. The next month or two kind of tapers down, but check those 6 months later, how many have done a good job in retaining that? So I think using tokens to bootstrap network growth is kind of a great aspect of it, but keeping the complex economies of why people should stay, having long-term involvement and growth, that's a bit more sophisticated. And so I think, it's not just sell a token, get people, and they stay.
Yeah, I think there's sort of two aspects they talked about here. It's kind of related to 2 and 3, I guess, on their list, though, right? On one side, they made some comparisons to say like what the user acquisition costs are, right? So, for example, like I believe it used to be like it's $2-3 that you would spend like on Facebook ads, right? Like if you wanted to acquire a new user, right? And depending on what business you're in, what field you're in, et cetera, like those costs may be as high as thousands of dollars, or they could be as low as pennies, right, or cents. So part of the comparison they were doing here was like if you look at traditional user acquisition costs, which normally would be deployed as say advertising dollars, that can get repurposed but through the issuance of coins or tokens ultimately to your membership or your potential customers, right, instead, right? And I think that's a salient point, right? Like it makes a lot of sense. It's like, yeah, you're paying an intermediary to reach your audience versus directly reaching your audience. Whereas in the past with Web 2, it was very difficult to reach your audience because of the intermediaries, right? Like they were in these places that were noisy, algorithmically controlled, et cetera. And now they don't really address like how you overcome the marketing part still though, right? But you can certainly defer some of that money, right, minimally go directly into the pockets of your users, as opposed to by way of ownership, by the way, as opposed to like paying them to use it or some other type of thing. So that's one part. That's the earlier part, right? I think the thing that Abhinav was touching on though is the bigger challenge in the arena is these externalities, as they refer to them sort of in the document, which is like if you're extrinsically motivated by the financial upside of that thing, right? Like I want to own ApeCoin because I think it's going to be worth 10x versus I want to own ApeCoin because I believe in the ecosystem we're creating and I want to be an active member and builder and supporter of it, right? Those are very fundamentally different and sometimes diametrically opposed efforts, right? And this is why we hate public companies, right? Like in a lot of ways, because we feel they're burdened by satisfying shareholders over like customers.
Yeah. And actually one thing I want to point out in terms of to Abhinav is like I agree with your earlier statement in terms of like the early days of these type of things is speculation. I think some people are trying to very much like maybe like a stock market. If you're not an early investor, right? When a company goes public, like, hey, I have access to IPO. I want to get in and own a few shares. and then maybe sell really quickly and then just make a quick buck. Maybe that's what people are doing when it comes to tokens or NFTs or anything like that. However, on the other side, I think something that Li Jin and her team have also highlighted is this phrase product market fit, right? And I think we've been talking like NFTs and tokens, like, hey, this is digital art, but in terms of ownership economy, there's like entire startups. Abhinav was working on one. Greg, you're working on one, right? So it's not, the backbone is not just on, hey, we have a token, you're gonna make money. It's like what there's services that you are offering to creators and customers. But so to the supports part is saying like these token, just having a token does not guarantee you product market fit for your product, for your company, or your whatever your service you're providing to people. So don't get that twisted and say people are buying your token does not mean you have established that product market fit. I think that can based on what I'm just gathering from this report, that there might be a sense of an illusion, right? Illusions of grandeur, like, hey, or delusions of grandeur rather, like, hey, I have, we sold all these AMA tokens. Yes, everyone loves us. No, nobody's actually listening to the show, for example, right? But I mean, as two people,
there's not even necessarily a correlation, right?
right,
Like because utility is still a thing that has to manifest over time, right?
Right. But I mean, both of you are seasoned entrepreneurs. So I'm curious, like, as this product market fit, how do you see tokens in your own companies, right? As you're building in public. So how would you see tokens and figuring out, hey, when you know you have gained traction?
It was that phrase, I think it was coined in the show previously, promise market fit is kind of what happens in crypto. And this is kind of saying, you still need to get to product market fit. Otherwise, you're going to stay there and you're going to fail those promises, right? So that's kind of an interesting. It's a great point. It's important. In terms of tokens for our businesses, I think tokens overall is what we're trying to address, and also for our business, it's kind of, I guess you might just look at it as value, right? Kind of like, am I giving you the value for your time and your attention and for being a customer? So that's kind of almost like a loyalty scheme type thing, right? It's, well, okay, as well as that, do you have some ongoing interests? So if you were there early, do you continue to have some value because you were there early? So ownership comes in there. So it's not just like, hey, day one customers got $10. Okay, I'm out, right? It's okay. Day one customers have an ongoing interest because you were there on day one, right? Having some say, right? And so say can come in like direction. It can come in, like some of the conversations around Twitter, right? And kind of censorship. So having a broader set of people, the customers have a say, it makes the network more resilient because then they don't have to appease certain governments and, have a bit more kind of a broader outlook. And so those are all the things that I think we're trying to harness for ourselves and for the people that work with us. But yeah, I think that would be the main things.
Yeah, one of the questions I wrote down to ask, I guess, for us, or sort of more of the existential question is ownership even the right word here, right? And I sort of raised this, with both of you. I'm not sure entirely, right? Because the things that Abhinav described just now, for example, are accomplishable in Web 2, right? Like they're accomplishable with traditional businesses. Co-ops have been around forever, but they have never reached scale, right? And so if we were looking for a data set to actually learn from like what happens if you try to scale these things up, the co-ops would represent a good and interesting data set to actually look at, right? Because the technology is not changing that much because you still have humans ultimately interacting in some system of design, right? And so I think what I wrote down for my question was like, does ownership really matter? And the bullets I've kind of just put underneath, it was like, ownership is expensive, ownership is complicated, and ownership is time intensive, right? And the real question I have is, are we conflating profit sharing with ownership, right? Like, so like much of the disdain for Web 2, not all, right? So I would say if I would take the two big outliers in my mind of like, not outliers, but the primary things complaints I hear about Web 2, right? One would be that they're getting rich on our backs, right? In varying ways. Like the user generated part turned all of our contributions into dollars and we didn't participate in them. The second one, smaller one, but still meaningful, is that we are not in control, hence they can control us, like through censorship, through what they decide to invest in the roadmaps, like what they productize, et cetera, right? And so those two pieces, which I think are very real, salient, top level, meaningful pieces, are, I think, the primary, when you hear like the maxis in like sort of this Web3 ecosystem, I feel like they are in the tear down the universe sort of edge of that thing, right? I'm a little more pragmatic about it, right? Like, and that's why I'm kind of curious about this, the broader context of this, right? Is it really that consumers were like, I want to own my social network? Or were they like, if you're making money off of me, I want to like part of the money, which maybe is ownership in the abstract, most like syntactically true sense of things, but not in all of the other nuance and meaning that comes with ownership also, right?
I think
I'm
it's
just kind of curious where you guys are.
I think it's the latter, Greg. I think it's all about, in a way, it's permission and consent to use my data without to target me with ads, or target me about X, Y, and Z, or give me the opportunity to opt out of certain things. I think when I hear ownership and I hear all of this stuff, I mean, it's like, philosophically, I'm like, okay, great. This is a nice little, this is interesting. There's parts I can get behind. However, it's like saying, why do I want to participate in this service? And like, do I want to be an owner of Facebook? Like, I might as well buy some shares in the company and maybe make some claim to it. But then you're also very much limited based on how much shares you own in that company. But to also the same point, do most people who participate in this ownership economy really want to be an owner? Do they really want to spend their waking moments like drafting or mapping out the role, the strategy of a company, right? I mean, for example, like Abhinav, if I become an owner of your feed, I honestly just want to use your service. I might want to suggest different features, but I'm not going to be like, hey, I think you should change the color of the navigation to blue. I think you should do this. Like, why don't you have a Windows Phone app? Why aren't you in the metaverse? Like, there's certain points where
I want a Palm Pilot edition.
exactly. I want a Palm Pilot. Like, why? Can you put something for the Kindle? Like, I don't care if you can't make it work. Just make it happen. Like, I mean, that's the point where you have too many cooks in the kitchen, right? And do most people honestly have the time or effort to do that? And the likelihood is probably no. Most people that want to participate and say, oh yeah, I'm embracing Web3, I take ownership, there's so much more to it, as opposed to just, oh, we think just high, that 50,000 foot view. It's like, oh, I can just maintain my data. Great. That's great. You can do that, but you don't necessarily have to.
You could do that in Web 2. I guess, so Abhinav, I'm kind of curious what you think, right? Like, I certainly get the being a shareholder part, right? Like, but that's like an arm's length relationship for the most part, right? But ownership, this word commingles all of these like operational roles with shareholders, right? With, like all these other concepts. And I'm kind of it feels overloaded to me a little bit.
Yeah, look, obviously there's a certain amount of marketing that goes into this report, because that is their slant on it, right? And that's legit. It's a good slant. I wouldn't throw rocks at it, but there was more nuance to it. I think voting in any scenario, voter turnout is the biggest problem in having any voting setup, right?
Yeah.
People don't turn up to vote. They're like, someone's taking care of it, right? Yeah. But when things go wrong, them having the ability to vote, that is important, because if shit's hitting the fan and I don't even have a vote, at that point, I'm like, I feel frustrated and trapped. So having that ability, but not needing to exercise it at every instance, I think sort of building for that, I think is important. But I think I agree with your point, is that the big thing here is value sharing and kind of having input and not being taken advantage of. And so I want to be able to say, hey, I don't like what you're planning to do there. And so building an organization that mechanically has to ask me for that has some value. if it's not going to be able to move forward, if I'm going to have to be at my computer and submit proposals, that's not like I wasn't here for that. That's your job, right?
Yeah.
Yeah.
It's almost like to I think both of what you're saying. And I'm not trying to coin a new term here, but user value makes more sense to me, right? Because it is saying your presence in our network, for example, creates value. Here's your share of the value, or some percentage of that share of the value that that you generate, right? Your contributions, right? Like your time, your energy, all these other things are about value ultimately, and recognizing that users have value, and putting that above board as opposed to like sort of these backroom deals or, whatever it may be. The speculative part is the shareholder part, right? Like, because that's like, you're not just like, that part means you may not even be a node in the network itself, right? Like you could be a Facebook shareholder and actually not use Facebook. You could just believe that the operating team is going to do a good job. You believe that, maybe they're impenetrable, like as an entity, whatever it may be. You can invest in them regardless of knowing about anything about the product itself, or sort of like being an actual user or caring about it, right? But it does feel significantly that the thread between all of these is that we want, all of us individually, want to be recognized for the value that we create and contribute in this world now, as opposed to like just being glossed over or rounded into some other thing, or being promised that the value we get is like the product, right? As opposed to like recognize, since we are the product, that we are there, right?
Yeah, I think the last. Let's go ahead, Abhinav.
I was just going to say, I think it's also a little bit of what's happening here is alignment of who are the shareholders and who are the users, and that's a big part of this space.
Yep.
Because what happens in listed companies is that, well, like you said, Greg, they're probably different people. I mean, Facebook's going up. I'm going to buy 100 grand. I don't have 100 grand, but if I did, I'm buying 100 grand. But and me as that shareholder, I don't give a shit what you're doing to make that 100 grand plan.
Right. Anything, whatever it takes to make it get there, you're whatever.
Yeah.
At the end of the day, it's your dollar. The last thing I'll say about it, I think, is in terms of like, why do we? And I get there's the whole marketing spin on it. Great, everyone needs something to brand, but at the end of the day, since I think this whole concept is very ambiguous, amorphous, right? It means things to everyone else. Like, what is this Web3? Just call it Web3. Like, even that is very vague. But then it's like everything else underneath it is like, it means different things to, it when you see it, like it offers you the opportunity to define what that is. I think everyone has a general understanding of the concept of it, but like, I think what we're running afoul of is like, hey, we have Web3, then we have ownership economy, we have the like everything is like, wait, you're all saying the same thing. Why are you changing the different terminologies and whatnot? But let's move on.
I think it's important because otherwise you would have to describe it over and over again every time you wanted to talk about the thing, right?
Well, agreed. We're not. I don't think this is one of the things we're necessarily going to settle right now. But let's go into the third option here. Third takeaway, not really option. New token distribution designs are boosting user loyalty. I kind of like this take. I like this takeaway because it shows that you need to do something creative or have a solid plan when it comes to your tokens in order to, and if you do that and you gain adoption, you're going to gain your fans, your users, your owners or buyers will have will be more dedicated to your service, to your platform.
I think this is what Abhinav was chatting about just recently, actually, that alignment between sort of the shareholder and the user is, I think, part of what this is ultimately recognizing and acknowledging. I think, however, the bigger risk here that I actually see, and this goes back to the promise market fit idea, right, is that a lot of these projects are yet to deliver on they're failing to create enough surface area for loyalty, I guess, right? And so what ends up happening is, unless you are good today at fostering good relationships amongst your members, you may the whole thing may collapse, right? Because ultimately, if the software, the tools, the services, whatever, there's all these collection of things that you're intending to deliver take longer than expected or anticipated. What I've observed, at least, right? I've pointed this out earlier. Pre-mint Discord versus post-mint Discord are like two different worlds, right? Because like everyone is like, hey, yes, positive, forward, let's go, right? Like, beforehand. And then afterwards, if I actually prefer the distilled version that's left after, because the people left are the people who like believed in what the thing was doing and want to be there for the reason they were actually getting into the project, as opposed to the speculative part of like being able to flip it or make some money on it quickly, like in the first 24 hours of sale. Right. But arguably, most of these projects, all of our projects, make a promise about some future value, right? And that loyalty, you can be loyal to a set of people, I think, for sure. But you have to activate or manifest those people into new things, right? Like that either is some kind of work on the organization you're building itself, or it has to be the usage of the thing you are making or plan to make in the beginning, right? Otherwise, like, what am I going to do sitting around here just talking to a bunch of other people about the same thing over and over again?
Mm-hmm. Yeah, the report kind of cites the Axie Infinity blockchain game as kind of like that example of how you maintain player retention versus other things. And I'm just going to show this.
It's hard to use that as an example, I guess, right? That's the point.
You mean Axie?
Yeah, like you're paying people money, right? Like, yeah, like it's just, it's like, sure, you could keep people around, or like if you pay them, right? Like most people play video games for free. So getting to play a video game, get paid to play a video game, like depending on where you are, when you look at those numbers, and I bet if you overlaid them on a map, they probably still tend to stay in the markets where actually that's a meaningful amount of money, right? Like to keep playing, as opposed to like the places where it's not.
Yeah.
The other angle of the sort of, I think it was just one really good word. I think Hitton used it, which is hodlonomics, which I think is a great word. Because basically the idea is when you're doing your token design or strategy, you lay it out in a way that you incentivize people to need to hold to enjoy future value. Yeah. Right. And so staking mechanisms are the sort of simplest way of that, right? APY returns, etc. The other things are like the derivatives. So like, mutant apes, what were mutant apes, bored apes. So how can you create token design that gets the people who currently hold to want to continue to hold because they believe there's more value coming?
And maybe like rally coins, creator coins are probably the epitome of what both of you are saying. Right, because it's like you want to give people incentive to hold these coins, and maybe to gain more coins. And if you're a successful creator and you have your own token, right, and it's like, hey, I want to invest more of my money into getting more of these tokens, so that way I get more benefit by, with AMAs or meet and greets or special events or anything like that. I mean, that's specific to the individual creators. I'm very like I can clearly see it in terms of like, why would I want to hold more like tokens for Zealous? Why would I want to hold more tokens for hold more NFTs for hugs? All these other things, because it's like, does it open up more opportunities for me, or does that individual token itself offer expanded opportunities without me necessarily buying 15 other ones?
And I think, I've laid these out well, I think, but there's a few different incentive structures that kind of work, right? Like financial, speculative incentives, right? Like, so for example, the airdrops, if you're like, every one of those things is worth 0.5 ETH, yeah, I'll hold on to it because basically they all sell out, or I have like a huge upside in selling those things later, right? APYs, which tend to go down over time and falling out of favor to some degree, right? But staking is one mechanism that's also there, right? So there's a financial vector here, right? Like that is one way to keep people engaged. Another one I think is just community, right? Like, so, I saw someone made this tweet and it was pretty poignant. Like, actually, And I find it one of the oddities of our space. You could be in a community and all your friends are in there, but the only way to keep those friends is to hold that thing, right? And that is a little strange in some ways, because like if you hit financial hard times and you need to sell that thing, it seems very odd and almost a shame that you also in the process lose your friends, right? Like you lose access to these people. So I imagine the token gating communities will see some evolution over time to be more inclusive and actually just have more sections that are not, like the purely fully gated ones. I get why they do them because of like the noise, right? But I think we're going to have to see some evolution here. So community is the second vector. A third vector is utility of many and multiple forms, right? Like with Zealous and Zealcoin, you're using it like for a thing, right? For other utility might be just reputational, right? Like in Abhinav's product, like it'll be a reflection of who you are and your contributions and things like that, right? And a store of value for things you've acquired and accumulated, right? And then I think the fourth one is just doing the damn thing, like, right? Like the thing that you said you were going to do, right? Like, so it's like, it's the funding for, if you were going to make a game, then go make the game, right? Like entertainment, right? Like content and entertainment and all these other variations, I think is like this other vector that, which I think is where most projects screw up, is promising that early, right? Because that's hard to get right. Or certainly like true entertainment is like really hard to get right, right? Like, like Yuga Labs has got hundreds of millions of dollars, but they're not a game studio. So I don't know how they make a game, right? Like, and it probably takes you a year to make a game, and Web3 moves in like dog years. So like a year is, like, I don't know, like 6 minutes, right? So people get really frustrated and tired quickly, right? Like, and they're like, oh, this is probably not going to happen, or they're in the space that they miss out on a lot of things. But I guess that was just the broader point about loyalty, I think is, as we're all circling on, is that there's a lot of ways to engender that loyalty, but sitting around and doing nothing is unacceptable, right? Like you have to plan in one or more of these vectors to get and hold on to that loyalty over time. And that is, I think, where the promise market fit versus the product market fit part fails for most of the projects.
Well, we're running short on time. So I think these last two takeaways, we can actually bundle together because they're actually pretty close. So the last 2 points are like, the user ownership leads to richer ecosystems of projects and contributors. This one, it seems I kind of sort of grok this one, but I'm hoping that both you, Greg and Abhinav, you can explain this one. But then I think we've also clearly covered in this episode the last part, where the ownership economy allows users to become owners earlier and participate in value creation. And I think we certainly addressed that one in already. Yeah. But Greg, to your Greg and Abhinav, any thoughts in terms of the fourth part, where user ownership leads to richer ecosystems of projects and contributors? I think this one is like, hey, Web3 allows open source, is basically open source. It's permissionless. So anyone can build on whatever, and any IP rules and regulations be damned. I can just build, I can build off of URFeed. I can do a mashup of URFeed and Zealous together with my own token or whatever. Any issues with that?
No, I think that would be my take on it too, is that it's really referring to the openness. I think layer 2s are a great example, right? Layer 2 chains, they just said, oh, we like this, we're going to do it again, right? And we're just going to feed off the main chain. It's just a great example. And they said, we're not fundamentally doing anything really different, but the gas price is going to be cheaper and it's going to work in this way. It's just a great example of how people are able to do that. And I think there are more and more ways that that's going to manifest, like the fact that Uniswap is able to kind of again, it's just built on top of another ecosystem, right? Like the fact that people are just able to plug into things and create, whereas in the Web2 world, you need to, some of the platforms offer open APIs, but majority of them, you need some level of permission. You need that they are okay with you doing that. Here, it's kind of like, if you can access it, you can use it, you can do something with it, crack on.
So yeah, like Mastodon is open source version or a decentralized version of Twitter. Like I could just go off and put like an Eventbrite or a Substack on top, type of Web3 type of thing on top of that, without anybody, saying, why are you doing this? You don't have access to this, pay us a fee or anything like that. It's easy peasy type of stuff.
I think the open source analogy is a really great one though, right? Because on a couple of fronts, like you said, Ken, like there can be forks, like they mentioned loot, I think in the article, and how there was like all these derivative projects, et cetera. I think about, I'll give you a practical example, right? Classic startup company starts up, right? And they're British, they're English, they're American. They do everything in English, right? But they will never get to the translated versions of their product because they don't have the cash, the resources, maybe they don't have enough users, right? In this world, one user could say, well, I speak French and I'd like it in French, and they can help it be in French like right away, right? That kind of thing is more readily available. And I think it's part of the way that, and the reason that that's readily available is, one, this does draw on the things that people are passionate about. And with tokenomics that exist, the value doesn't have to be based in dollars. It can be based in more in ownership in the thing itself, right? And so that value is assigned by us as opposed to like being assigned by sort of like economists or something like that, right? And it's okay for me to want to own more of what something I think is valuable, right? As opposed to like having to do it because extrinsically it's valuable. And that I think is what feeds this loop in really new and interesting ways.
Cool. Abbott, of any?
I was going to say one more thing on that. I think the other angle where that comes in is you've got a history of incumbents buying innovative creators and crushing them, right? Yeah. And that goes away, right? If it is a decentralized protocol, you can't just buy it and make it go away. And I think that's an interesting dynamic of the space too.
Gotcha.
Oh, no, last one I'll add then, I guess also just to that is just that the breadth of ideas is much bigger than in a traditional organization, because like we have startups, we have like maybe one person in charge of product or a few people giving input on product. And ultimately the number of voices we're going to hear is limited to the number of conversations we can have with the market, right? Like, whereas the market could be like, or an innovative person could be like, I drew this up because I think this is how you fix this. And they don't even have to like know us to get that in front of us, right? And I think these like, it is a very efficient process for at least surfacing new things. And then that means that new ideas can build and form around them quicker.
So it's basically one giant ongoing hackathon of sorts.
Yeah, in a lot of ways, right? But in all parts, right? It could be the product side, it could be the marketing side. Like your customers are all your marketers at this point, so they all come up with their innovative, unique ways to sell and market the product actually itself. And it may turn out that one of them has. And by the way, I think mass marketing is a very difficult path going forward for every kind of business, right? Like we're moving increasingly personalized, increasingly like account-based, increasingly one-on-one, right? Like that's what having an army of supporters is good for, right? It's the best marketing channel possible.
Any thoughts that you guys have in terms of the last point, or in terms of the ownership economy allows users to become owners earlier and participate in value creation?
It's like self-evident, I guess, in the domain. I mean, like the difference is that these things are largely, there's a distinction between like penny stocks and sort of like, sort of fortune, like S&P style stocks, right? And so when you see the fervor in the market, it's because like folks want to get into the big ones, right? But they make a great point and lay out like, comparing Uniswap and Coinbase throughout the article, worth reading for the comparison. And the people who bought Uniswap in this case made more money, or relatively speaking, made more money than like if you bought in on Coinbase, right? Like they actually point out that like everyone who bought in at Coinbase's IPO is basically underwater now, right? For the record, most people who bought crypto are probably underwater on like the things they bought in crypto, though, right? So
big statement.
I mean, we know how much of it is concentrated in very small places, right? Like of the actual wealth. So like generally speaking, most coins are underwater, like haven't gone up, right? Or flatlined or disappeared or completely got rugged out. So I'm not saying crypto's bad. I'm just saying like it's hard to go up, right? Like, from an existential point of view, moving a whole market is just a very difficult thing, right? And so, I think like this is ultimately the challenge, right? Is that people haven't had the taste of failing either, right? Like, and that part I think will be the biggest, anchor around the necks of like this stuff succeeding. Because like when you like I'm going to try it. Eventually someone's like, I'm going to make a bigger bet. And then that bigger bet, it's like at the casino, you're like, and then it's gone. What do you do? Right. Like,
I feel like maybe everyone else doesn't have such a high rug ratio as me. Like I just like there's no financial game in here for me. But
I've gotten rug 0 times. So yeah, I mean, like other than one time, like Discord made me send me a link, which I was not paying attention, and sent 0.4 ETH off to somebody. I've never bought into a project that was a rug, right? But that doesn't mean that they're all going to do well. I guess is the main point, right? Like, like my portfolio is up relatively speaking, but it's still like somewhat illiquid, right? Like a lot of it's in NFTs now. And, like you still have to have like a buyer on the other side for it to really actually be up for you, right? Otherwise it's just paper gains, right? Unlike in a token, when you're owning a coin, you usually can trade it, right? And at least that's like a liquid difference, right? Today. But a lot of these coins don't have external value yet. And by the way, I don't think that's a bad thing. Like I said, I think owning a thing that you think is valuable is where it needs to end, right? Like when you're building communities, right? Like, because the second you're doing it because you own it and it's extrinsically valuable, then now you're speculating, right? Like it's almost like the mindsets are different, like should be separated.
Yeah. Cool. Then the other point on this fifth one is also that there are ways to get in without money down. There are ways to earn with your time, and I think that is a nice attribute of this space, that it's inclusive.
Awesome. Well, thanks, Abhinav, for joining us for this episode of the Created Economy podcast. Looking forward to having you back on, and you can hear more insights about Web3 from Abhinav and Greg and everybody else and their other friends who join them every Tuesday for Created Works. That's at 10 a.m. Pacific time. If you need the time zone, put that into Google, figure that out. But yeah, and then you can definitely find out more information about the show on our website at createdeconomy.com. All right. Well, and final thing, be sure to check out all episodes of the Created Economy podcast anywhere you listen to podcasts, that being Apple, Google, Spotify, Audible, Stitcher, Castbox, and Anchor.
Just stop mentioning those. I don't even know what they are.
I'm hoping at some point that this will be hashtag sponsored, right? And then I can be like, oh yes, we got sponsored by Stitcher. You know what? So I need the hoodie. That's what I need. I need to collect hoodies. So
how about I just send you the hoodie and you stop mentioning them?
Greg, are you getting extra coins for your rally hoodie?
I'm going to Rally Day. I will be a CEX next week. So, I don't get any extra coins for my Rally hoodie, though, unfortunately. But we have an active airdrop. If you are listening, feel free to check out my Twitter. You'll find it.
Cool. All right, everybody. With that wraps up another episode of the Created Economy podcast. Tune in next time for more insights into the creator economy. See you guys later.
Later.